Have you ever wondered how to achieve an 850 credit score? Well, today is your lucky day. In the world of finance, your credit score can be your best friend or your worst enemy. It's a three-digit number that speaks volumes about your financial responsibility and creditworthiness. The score ranges from 300, which is the lowest, to 850, the highest attainable score. Why is a high credit score so important, you ask? Well, it's simple. A high credit score, especially one as gleaming as 850, can open doors for you that a low score simply cannot. It's the golden ticket in the world of finance, a sign to lenders, landlords, and even employers that you're reliable and responsible with your financial obligations. Let's make it a bit more tangible. Imagine you want to borrow money, say for a new car or a house. With a high credit score, lenders will see you as a low-risk borrower. This means they're more likely to grant you the loan and at a lower interest rate, saving you a significant amount of money over time. Or perhaps you're in the market for a new credit card. A high score can give you access to cards with higher credit limits, better rewards, and lower interest rates. It's a financial freedom that a low score cannot provide. And it doesn't stop there. A high credit score can also make renting a home easier. Landlords often check credit scores to screen potential tenants. A high score can give you an edge over other applicants, making it easier to secure the rental property you desire. So you see, a high credit score is more than just a number. It's a testament to your financial health, a key that unlocks numerous benefits and opportunities. The advantages of having an 850 score are truly immense. Now that you understand the value of a high credit score, let's dive into how you can achieve that coveted 850. The first step towards an 850 credit score is understanding your credit report. A credit report, in essence, is a comprehensive record of your credit history, compiled and maintained by the three main credit bureaus: Experian, TransUnion, and Equifax. These bureaus gather information from lenders, creditors, and public records to create your credit report, which serves as a financial report card of sorts. Now you may ask, what exactly does a credit report contain? Well, it includes your personal information, account summary, credit inquiries, public records, and importantly, your credit score. This score, ranging from 300 to 850, is a numerical representation of your creditworthiness. The higher the score, the better your credit health. The credit bureaus calculate your credit score based on a model developed by the Fair Isaac Corporation, commonly known as FICO. This model takes into account 5 key factors: payment history, credit utilization, length of credit history, credit mix, and new credit. Payment history refers to your track record of repaying debts on time. It's the most influential factor, making up 35% of your FICO score. Credit utilization, the second most crucial factor, is the ratio of your credit card balances to your credit limits. It makes up 30% of your score. A lower credit utilization ratio is better for your credit score. Length of credit history, accounting for 15% of your score, considers the age of your oldest credit account, the age of your newest account, and an average age of all your accounts. Meanwhile, credit mix, constituting 10% of your score, assesses the variety of credit types you have, such as credit cards, mortgages, and auto loans. Lastly, new credit, which also represents 10% of your score, takes into account the number of recently opened accounts and recent inquiries for new credit. Opening many new accounts in a short time can negatively impact your score. Once you've grasped your credit report and the factors that influence your score, it's time to start improving. Improving your credit score requires cultivating good financial habits. First and foremost, paying your bills on time is a habit that cannot be overstated. Each late payment can have a detrimental effect on your credit score. It's as though you're running a race, and every time you miss a payment, you're tripping over a hurdle. The more hurdles you trip on, the further back you fall. So lace up those shoes and make sure you're clearing every payment hurdle in sight. Next, let's talk about credit utilization, a fancy term that simply means how much of your available credit you're using. The lower the percentage, the better for your credit score. Imagine your credit limit as a swimming pool. If the pool is full to the brim, there's no room for you to swim. But if it's only half full, you have plenty of space to enjoy. So, keep your credit utilization low, ideally below 30%, to give your credit score room to swim and grow. Another habit to cultivate is resisting the temptation to apply for new credit often. Every time you apply for credit, it can cause a slight dip in your score. Think of it as a small leak in a boat. 1 or 2 leaks can be manageable, but too many and you'll find yourself sinking. So only apply for new credit when absolutely necessary. Finally, remember that age is a factor when it comes to your credit score. The older your credit history, the better it is for your score. It's like a fine wine that gets better with time. So don't be in a hurry to close old accounts unless you have a good reason. Adopting these habits won't change your score overnight, but consistency is key on the journey to 850. Cultivating good financial habits is a marathon, not a sprint. It takes time, patience, and discipline. But rest assured, every step you take in the right direction brings you closer to that coveted 850 credit score. Handling existing debt is an essential step towards a higher credit score. It's akin to being lost in a labyrinth. The only way out is to navigate through it, not around it. So let's explore some strategies to tackle this beast named debt. First, we have the snowball method. Picture a small snowball rolling down a hill, gathering more snow and growing larger as it descends. This method works in a similar fashion. Start by focusing on your smallest debt. Pour as much as you can into paying it off while still paying the minimum on your larger debts. Once the smallest debt is wiped out, roll the money you were putting towards it into the next smallest debt. Continue this process, and like a snowball gaining momentum, you'll be clearing your debts faster than you might think. On the other end, we have the avalanche method. Imagine a snow-covered mountain. Suddenly, a piece of snow dislodges and tumbles down, causing a massive avalanche. Here, instead of starting with the smallest debt, you start with the one with the highest interest rate. By paying this off first, you reduce the amount of interest you'll pay over time. It might take longer to see progress, but in the long run, you'll save more money. Both methods have their merits, and the choice between them depends on what motivates you. If you're driven by quick wins, the snowball method might suit you. If you're more concerned about the total cost, the avalanche method could be your best bet. Reducing your debt amount is crucial for your credit score. It lowers your credit utilization ratio, which is a significant factor in calculating your score. A lower ratio means a higher score. It's that simple. Remember, patience is key. Reducing debt is not an overnight process, but each step you take counts. Consistent effort and sound strategies can help you reach your goal. Once you've got a handle on your debt, you're well on your way to an 850 credit score. Achieving an 850 credit score is a marathon, not a sprint, and maintaining it is a lifelong commitment. It's a bit the gift that keeps on giving. Only you are the one that must keep on giving. It's a commitment to financial health, fiscal responsibility, and, above all, discipline. Now, you've done the hard work, reached this pinnacle of financial trustworthiness. You're standing atop the Everest of credit scores, basking in the glory of an 850. But how do you keep from sliding back down that mountain? First and foremost, continue to keep a watchful eye on credit report. Regular checks are vital. It's akin to keeping a weather eye on the horizon, looking out for storms that might be brewing. Mistakes do happen, and you need to catch them before they impact your score. Secondly, resist the temptation to close old accounts. While it might seem like a good to simplify your financial landscape, closing an account can actually lower your score. Those old accounts are a testament to your long-term reliability, a veritable monument to your fiscal discipline. So let them be. Lastly, but perhaps most importantly, continue to practice those good financial habits that got you here. This means paying your bills on time, every single time. It means living within your means and not overextending yourself. It's about making sensible, well-thought-out financial decisions. Remember, your credit score is a reflection of you, of your financial story. It's a narrative that tells of your reliability, your responsibility, and your discipline. So keep writing that story, chapter by chapter, page by page. Maintaining an 850 credit score is not an end in itself, but rather a means to an end. It opens doors, it provides opportunities, and it gives you a solid foundation on which to your financial future. With patience, discipline, and perseverance, you can achieve and maintain an 850 credit score. So, are you ready to start your journey? If you found this information helpful, don't forget to hit the button and subscribe to our channel for more videos and tips on mastering your finances. Let us be your guide on this journey to financial mastery.